Amit, good morning. Thank you for joining us. Now, Amit, it's a large transaction, but is this transaction really strategic in nature, or there was a desperate seller and you were able to, get that opportunity because Blackstone has money and expertise, and there was a promoter where the group is debt trapped and the promoter wanted an exit and Blackstone came to rescue?
Yeah, hi, good morning. I think that's not a fair description. All investments by us are strategic in nature, and there was no scenario here of a desperate seller. This process has been going on for quite some time. This was not like a short, quick process. This has been going on for months, and from what we understand, the seller also had options. So, and from a Blackstone standpoint, we are not opportunistic. Our approach to any investment is a business building approach. That's why you see us committing very large amounts of dollars and putting global Blackstone resources behind our investments. We are committing almost $500 million to Essel Propack. Earlier this year, we committed $500 million to Aadhaar Affordable Housing Finance. You may recall another publicly listed company, Emphasis, where we committed close to $1 billion in 2016. But in each case, the idea is very strategic, a business building mindset. Take a company which is a solid company and then put all the Blackstone muscle behind it to improve the company and take it to the next level. So that's the thought process. So it's very strategic in nature, and I'm happy to walk you through what our thesis was.
Thank you for that. I just, as journalists, it's important for us to clear the air. I hope my question was coming from the fact that, there is a stress at SL Group and markets were curious. Okay, let's get down to what would Blackstone bring on the table. Essel Propack, what my understanding of the company is that it's a company which enjoys almost a global monopoly, at least in the packaging space. How will Blackstone ensure that the business becomes stronger? Will you get them more business? Will you make the return ratios more better? You think you will be able to get an expertise of manufacturing? What's the thought here?
Yeah, good question. It's a bit of all of the above. So I think Essel Propack is the world's largest manufacturer of laminated tubes, the number one globally. They operate in 10 countries, 20 manufacturing plants. And in the oral care segment, which is toothpaste, so almost any toothpaste you may use, whether it's Colgate or Patanjali or Promise or Pepsodent, the tube will be made by Essel Propack. So they're the world leader with almost a 40% market share in packaging tubes. Our thesis here is to accelerate the growth of the company along two vectors. The first vector is newer end segments, which is beauty, cosmetics, and pharmaceuticals. And the second growth vector is emerging markets, which is India, China, Latin America. So we think we can take the leadership position in the oral care segment and really accelerate the growth, and the growth both in end markets and in geographies. And where Blackstone comes in is we have a very large global network in the consumer sector. We have owned and we own other packaging companies, so we know this sector really well. We know the customers of this company really well. Many of the customers for Essel Propack have been with the company for 1 decade, 2 decades. A couple of customers have been with the company for 3 decades. So very long-term sticky relationships they have, which Blackstone can enhance. In addition, being a private equity firm, probably one of the largest globally, we also have large capital resources to deploy. So if there are opportunities to accelerate the growth in emerging markets, in the newer end segments, we'll be happy to evaluate tuck-in acquisitions. So that's on the revenue side, where we think we can enhance the revenue growth of the company. By the way, the company is already growing at 11% top line year over year, whereas the entire sector grows at about 1 or 2%. So it's already a fast growing company. The question is, can we make it a faster growing company? On the cost side, productivity improvement measures is something which Blackstone has a lot of expertise in. For example, lean manufacturing. We have several GE Six Sigma lean experts who go into manufacturing companies and improve the operations of those companies. We also have sector experts. For example, Harish Manwani, who was the Chief Operating Officer of Unilever globally before he retired, and he recently retired as chairman of Hindustan Unilever. He's a senior operating partner at Blackstone. So we have people like Harish Manwani, and we have 80 such executives globally who can work with the company both in driving revenue synergies and in driving better productivity or cost optimization.
Amit, any plans to take the company private? Are you going to keep it listed? And also, if you don't get the prescribed open offer, then what?
See, our thought process is very long term and it's very strategic, but this process of open offer tendering or taking private, as you know, the way the regulations work with SEBI is completely out of our control. So we are happy with whatever. If we are, because for us the 51% was the critical threshold, and if we get more, that's great, more the merrier. If we don't, that's fine too, but we don't control that and we don't worry about that. But the way the regulations work in India, that once you have 51%, you actually have almost entire autonomy to run the company the way you want to. And we have experience in that. We also have a 52% stake in Mphasis, an IT services company, and we are strong believers in corporate governance. So everything which we do, whether or not it's required, we always pass it through the minority shareholders for a shareholder vote, and we have never had any issues. So we are very happy with 51%, but I cannot speculate on tender offer, go private. All those are regulatory issues. Whatever comes, we are very happy.
Okay, so can you give us some sense as to what is going to be the role now of Mr. Goel? Is there any sort of an exit clause? Does the continuity remain? What is the strategy there?
Yeah, so good question. Continuity is a big focus for us, and it's a big part of our investment thesis. It's very important this is a B2B business, what we call in Blackstone terminology a B2B2C business, because the customers you serve are B2C customers. In such businesses, customer relationship and customer trust is paramount. So continuity is very important. Continuity of people, continuity of account managers, continuity of R&D projects, because a lot of projects are underway and these are long-term projects. So we are backing continuity here. Ashok Goel is partnering with Blackstone. He will continue with a 6% stake in the company. So he currently owns 57%, 51% we are buying, so 6% he will continue. In addition, he's available as a non-executive advisor for the next 5 years in whichever area he can help the company. So we are quite excited about this partnership, not just with Ashok Goel, the team of the company, and we think the combination of continuity and acceleration of growth is the right formula for this company.
Sure. Amit, just finally, your outlook on the dividend picture. Do you see it changing? I mean, stock price is like an NAV, whereas dividends are, of course, like cash flow, and the investors would like to know what to expect there.
Good question. I cannot make a forward-looking comment, but all I can say is you can point to our track record. You can see the dividend history of Mphasis since Blackstone has taken ownership of that company in 2016. We pride ourselves on being very efficient capital allocators. So any capital or cash in the company, unless the management can deliver at least a 15% return on that capital, our belief is that capital should be returned back to shareholders. So we are not believers in building big war chest for acquisitions and things of that nature, but being very prudent in capital allocation. And if that capital allocation is not available, or acquisition opportunities or deployment opportunities are not available to earn that 15% plus return, then that cash better belongs to the shareholders. So that's just a philosophical point of view we have, and that philosophical point of view is evident by our track record, as you can see with Mphasis.
All right, Mr. Dixit, appreciate your time and certainly hope to see much more of you going forward. You know, we've been trying to meet, so I'll send you an email and fix maybe a time over coffee, and hope to see you soon.
Sure. Well, thank you for giving the opportunity to be on your show, and look forward to meeting you in person.
Okay, thank you very much.